Hello and good afternoon, traders. I'm on the afternoon of 17th of May, 2:42 p.m. Let's quickly take a look at the Nifty, Bank Nifty and the rest of sectoral charts. How did they play out last week and what can we expect the week ahead? So without wasting much time, let's quickly take a look at the Nifty futures. I'm using our usual NexxT price and RSI indicators. One new added advantage is our infamous HHGB, the Heikin-Ashi trigger, now gets color coded. That's useful. So this is the weekly chart on my left hand side, and as you can clearly see that last week when I was let me blow out the weekly chart. There you go. So last week when I was talking about the markets, and I think I gave the name to the title of the video saying that the most important level is last week's high, right? And any kind of bullishness, if you're expecting from the market, should come once last week's high is crossed. And it did cross, and it did cross pretty well. So the momentum improvement, the trend improvement, the consolidation has led to fresh buying impetus. Psychological level of 25,000 has been crossed, and what was looking like let's say a bounce back has now given us another leg on the upside. So it's now little more than a bounce back. So what we were thinking about is like, let's have a strategy of cautiously bullish. We can now say that, we can shrug that cautiously off and it's more of a bullish market. Having said that, we should not forget the fact that we are not close to an all-time high and we are retracing this entire erstwhile correction. This particular low was very, very short-lived. And so if together we drop some kind of a fib retracement, something like this, then you would see the 50% mark and then the 61.8, more or less close to these highs, and which comes to around 25, 600, 700. That's the kind of level that you can expect. Looking at the way the market has closed last week, especially Nifty, those kind of highs are highly possible. These kind of levels are highly possible. So weekly charts and the long-term charts are improving. Coming down to the daily charts, let's blow that out as well. And let's take a look at what's happening on the daily time frame. The daily time frame reversed, trend and momentum were positive, took a breather and extended further up. From a short-term point of view, you've got these highs to deal with, which is what? Close to that little below that 25,500, 25,500, 25,600. So you've got a 200-point kind of a range, 25,500 to 25,700, where you can expect short-term resistances. Are there any signs of momentum slowdown, topping out pattern, some kind of a price formation? No. There was a bit in the past, in the recent past here, and then a little bit over here. But then now that we've got this breakout, I think that unless we see anything dramatic early next week, this market is well structured, poised for further upside. So the view should stay bullish. Let's take a look at the small caps and the mid caps. Let's go back to the dual time frame, wherein weekly on my left and daily on my right. Let's take a look at the mid cap index, and the mid cap had a beautiful run. Beautiful run on the same logic. Last week's high got crossed, and what a close it is, almost at the highest point of the week. Pretty good looking chart on the weekly time frame. Pretty stretched actually behavior on the daily time frame. So any kind of a pullback on the daily time frame will be welcome for a buy on a dip kind of an approach, but again, a bullish chart. Small cap, also a bullish chart. On the small cap index, we have to keep in mind this polarity that might play a role. Maybe, maybe not. I'm drawing on the weekly time frame. I think it will be easier for you if I just show you one chart at a time. I was drawing this range on the weekly chart of the mid cap, small cap, on the CNX small cap index. And this is where you had a proper, fractal low kind of a behavior. You got the breakdown, then the follow through move. And now the index is back to knocking those levels. It's a decent level. It has some importance in the past. We'll see how it behaves. The chart is pretty impressive, not a problem. The daily chart also looks a little stretched. You can see this looks a little stretched, but overall the small caps and the mid caps looks pretty fine, pretty well placed. Now, before I take a look at the individual sectoral charts, I always discuss the RRG graphs, which helps us to evaluate and understand the relative strength. Now, Strike Analytics is the website, the tool that I use, but sadly, I've been trying for some time, refreshes and hard refreshes. I think some issue at their end. I'll come back to this page after, let's say, 5 more minutes, and we'll see if we get the RRG graphs back or not. I did not want to wait for the RRG graphs and then make this video. Who knows, maybe over the weekend I may not get access to those. So let's dive into the sectoral charts, and let's dive it in a manner that after the Nifty, the most important pack is the banks and the financials, right? Bank Nifty, CNX Finance, the first two sectors which hit a life high in the recent bounce back, did cool off a little bit in the recent past, but now it's picking up. Pretty decent charts when it comes to price. The EMA of my RSI indicator, which I'm essentially using as a sign of momentum, is slowing down a little bit. It's creating a bit of a range breakout kind of a feel to it, but pretty good weekly chart, pretty decent daily chart. There's no strong signs to sound bearish or to look out for short trades. There's none. So it makes sense to stay with the trend. Bank Nifty, you should straight away go to private banks because they more or less mirror each other. So private banks, you can be looking out for some kind of a breakout long trades from this zone. CNX PSU Bank, however, is an underperformer because it's far away from its respective all-time high. It had gone through a sharp sell-off and a sharp revival, equally sharp on both the sides. Any kind of a pullback from here on, as long as the trend is positive, can be an opportunity on the upside. So we be very picky when it comes to the CNX PSU banking pocket. CNX Finance, I discussed that this was the first sector which hit an all-time high and it's been holding fine. It's picking up again. Stay bullish. There's no particular reason. The same logic which applies to Bank Nifty. There's no particular reason to sound bearish over here. The next sector after the banks and financials is essentially the IT. Now, this was a welcome move of a strong, I think 6-7% kind of a move that came last Monday. Weekly chart, pretty sharp bounce back. All right. Daily chart is extending now. And it's got fractal low over here, which is close to that psychological 40,000 mark for the CNX IT. It's at almost 38,000, 2,000 away from 40,000. Is it possible? Well, the trend momentum and the way the price is shaping up, yes, why not? If we see something on the charts wherein it shows some signs of slowdown, then we might doubt it. There are no such signs, so why doubt it? Let it flow. It's hugging the upper border of the Bollinger Band beautifully well, so it's showing strength. Let it continue. CNX Energy is the next one, which enjoys a pretty decent weightage after the IT pack. And the weekly charts have, gone back to a strong hike-in. We had that same logic which I had mentioned last week. Last week's high is an important level. That logic is holding well here. You've got the breakout. Again, a bullish chart. Everything seems like pretty well established in terms of price after this week's close. So energy also a bullish chart. Let's straight away go to metals. Metals has been particularly crazy. I would say that. I did not have a very good time analyzing metals because they gave a sharp breakout, very bad, horrible failure, equally sharp revival, and then again another round of sharp revival. So it's the size of the move. It is the size of the move as well as the time in which these moves are happening. It's just a matter of 3-4 days. So it's pretty difficult, to be honest. If I recall correctly, at this juncture, just 5 trading sessions back, CNX Metal was the weakest sector in terms of the price evidences on the chart. It was the weakest when it came to trend, momentum, Heiken-Ashi. But then there was the revival. So price dictates everything. And now it is dictating a decent uptrendish behavior, pretty sharp revival. One should wait for some cool off, then the next leg. We have seen that this particular pack has faced resistances close to these levels. So one should not rush and chase this pocket. Hopefully this time it will stabilize like the way it stabilized in the recent past, gave us another move. It should stabilize and hopefully should give us another move. One should look for the next move rather than chasing this one. Don't chase this one. Auto is another sector which has played beautifully. In fact, if you take a look at the last, I think 6 weeks, it's been a beautiful Heikin-Ashi behavior in the auto pack. And the degree of corrections in the recent 5-6 weeks also has been pretty trivial short-term corrections. So pretty decent move. Again, no signs of bearishness. There was a bit of a sign of momentum slowdown here. It did slow down just for a day and then picked up again. Now we are dealing with levels which has some historical importance. We should not deny that. We should not ignore it. This particular range in the past for the auto has been of some importance. The time it took to come down from this level to this and the time it took to go back to that level, you can see very well the difference, right? Maybe 1/5 the time it took. So it may get tired. Is there any signs of getting tired? No. Is there any signs of topping out? No. Is there a sign of momentum slowdown? No. But the fact that it has moved up pretty sharp, pretty fast, knocking back to those levels from where it has in the past come off multiple times, it will be prudent to be little careful over here and don't rush into any long trades heavily. If it gives some kind of a cool off and then the next leg will be much appreciated. So auto positive again, but do not chase. Doesn't make sense, just like we discussed in metals. Now let's quickly take a look at FMCG and consumer durables one after the other. So FMCG is doing well, good looking weekly chart. This is the range, this is the HAGB breakout. You can see some kind of a pattern. You can call it a flag. Looks like a decent pole, looks like a decent flag. It's got a little bit of exaggeration there, but one can definitely look at the breakout. Bullish chart, waiting for some fresh momentum on the upside. What about consumer durables? Also looking pretty good, closed at the highest point of last week. Same logic like it was for the Nifty, weekly high breakout. It has given you the weekly high breakout. Again, a pretty decent chart. It's gone up for quite some days now, 5 days I believe. A bit of a cool off will help for further upsides. Again, none of the charts as of now are giving me any signs of slowdown or bearishness. So looks like we are well poised for next week. We are left with pharma and real estate. Now pharma was a little tricky one. The tricky because couple of times, in fact more than couple of times, it had reacted from a level on the upside. The extent of the sell-off, the bounce back, again the sell-off has been pretty sharp, so not easy. If we go by the weekly charts, then I will sound a little more bullish above last week's high, this one, this one particularly, which is essentially this breakout. Till then, the readings are a little mixed up. Means it's not very clear, it's not very clean. So better to avoid predominantly trying to show some strength. We need this breakout. Close has been pretty good near the highest point of the week. Weekly low is pretty far off, that is over here. So yeah, you should be looking out for this breakout. I think it was Monday's trade, I believe, wherein sharp sell-off came because of Sun Pharma, and then the others kind of bounced back from their intraday lows. So a lot of earnings related drama did happen. But overall, I would suggest pharma, take a back seat, wait for a proper breakout above last week's high. And then we have the last one, which is real estate. Same logic, the weekly HAGB has given you a breakout, but the HAGB was a pretty wide bar. It wouldn't have been, prudent to take trade based on such a wide bar. But momentum, trend, price formations are mostly positive on the daily time frame. Any kind of a pullback should be a buying opportunity. Wow, that's pretty good. If I go down and take a look at USD INR, USD INR is predominantly weak when I take a look at the weekly chart. This breakdown will bring further downside to the dollar. But from a short-term point of view, it is picking up. No worries as of now, but I think 85.9 to 86 will be an important level to keep an eye. Apart from that, gold has decided to cool off, probably forming this almost like a double topish kind of formation. Natural gas is also cooling off quite a bit after the recent bounce back. And crude is bouncing back, and it is giving you some kind of a bullish formation on the daily time frame. Not a good looking weekly chart. So overall, I think based on the readings that we took a look at, let's take a look at strike once more. Oh, there you go. So it has come back. Congratulations. So lucky me and lucky you that this video will not go waste without analyzing the RRG graphs. So we'll take a look at the sectoral charts. We'll try and figure out. See, most of the stocks, most of the charts, not stocks that we discussed, were predominantly bullish, right? None of them are showing any evidence of momentum slowdown or topping out. So our RRG graphs, what we would like to see are those who were in the weakening or lagging, are they improving? Those who are in the improving, are they showing relative strength? So with that in mind, let's do a weekly time frame with the Nifty 500 and go the count of 10 weeks. I remember it was 9 weeks last. So we'll do a count of 10 weeks. 10 weeks, weekly, Nifty 500, right? And I'll get rid of those broad market indices. There are many, 50, 100, 100, 250, 400 and all those. So I'm getting rid of those and just try and focus primarily on the sectors and the themes. Looks okay? So which are the ones in the positive quadrant? Let's sort them. And you've got a Nifty private bank, oil and gas, which is energy, PSU bank, infrastructure, financial services is also there, PAC names, and FMCG. So not bad. FMCG we were discussing, we are looking for a breakout. There you go. It's in the positive quadrant right there. I don't know if you can see it right there. Yeah. And then you have the private bank, Nifty bank, PSU bank, financial services. Now, private bank Nifty has been losing vertical height, which means that the momentum is slowing down in a leading quadrant, which means it needs the breakout. For it to go up like this, price-wise, we need that breakout. If that breakout doesn't come, then it might continue to slip further. Relative strength will go away. So, strong sector should give us that breakout. Mid cap is improving, so is small cap. We did take a look at it. Energy, we have discussed this in the last class, in the last week. Left to right movement, pretty good sector. Look for long trades over there. Metal continues to be a weakening one, though the bounce back has been pretty sharp. But as I said, it's fallen very sharp. It's gone up very sharp, and that's why from being in the leading quadrant, very quickly it has come down to the weakening. It's still weakening, by the way. So that's why we took a decision that in the metals, do not chase. RRG graph is also telling you the same thing. Do not chase there. Coming to the ones which are still in the lagging and now bouncing back. You have the auto, okay. We have the realty. We have the consumer durables. We have the healthcare and pharma, and then finally IT, which has, after a long time, has started to inch up a little bit. All these which are in the lagging quadrant are going up vertically, which means the momentum of the relative strength is improving. And that's why when we did take a look at the price charts, all of them were positive, right? So if you are looking for some kind of a long trades from these names, realty, pharma, IT, healthcare, then you're essentially looking at a sector which is nowhere close to its all-time high. Let's say you take a look at realty, where you are and where was your all-time high. So you're essentially looking at a relatively underperformer, which is bouncing back. However, if you are planning to buy any of the stocks from the private banks or the CNX Finance, then you're looking at a strong sector and you're looking for the breakout. This is where lies the difference, right? So will the sectoral rotation happen? Will these guys slow down and those guys will pick up? We will discuss this one by one, week by week. But overall, long story short, all the charts are predominantly well poised and bullish. Because they are well poised and bullish does not necessarily mean that they will fly next week and go up. Please, let's not make that assumption. But there are no signs of bearishness. as because there are no signs of bearishness and predominantly the readings are bullish. Strategically, we should be primarily bullish. We should be looking to do long trades. And these long trades, are we going to pick up from the relatively strong sector or weak sectors? That is the call the trader has to take, and the market will unfold. It's always good to stick to the relatively stronger sectors, to be honest, right? So with that, I conclude this week's analysis on the Nifty and the various sectors. And it's good that we finally managed to take a look at those RRG wiggly worms. I hope you've traded well. I'm sure your long-term portfolio has improved significantly. Take care of yourselves this weekend and hopefully have a great week of trade, the next one. Thank you. Take care of yourselves. Goodbye.